Hello guys, welcome back to my channel. What we are going to be looking at today is liquidity. That is a big one, right? Guys, if you understand liquidity and you are able to identify this on your charts, it will be a game changer for you and this will increase your win rate. I guarantee you, because these liquidity areas on your chart can help you make sniper entries and know when to exit the market, okay, so that you can profit. Your win rate will significantly increase if you understand liquidity areas on your chart. So first of all, we have to define what liquidity is in forex trading. Liquidity refers to the ease with which an asset, okay, an asset can be a forex pair like Euro USD, GBP, JPY. That is an asset, something that you are trading, the pair that you are trading if you're a forex trader. So liquidity refers to the ease with which you trade that asset in the market, okay, without affecting its price much. A market with lots of buyers and sellers at any given time is said to have high liquidity. So if you have the more participants you have, that is buyers and sellers, the more liquidity you have in the market. That means they are placing more orders, so there is a high liquidity, okay? Conversely, if you have, if you have fewer buyers and sellers participating in the market, so it means there will be low liquidity, okay, if there are fewer participants in the market. Like with certain asset pairs, you know, they go for forex pairs, there is really low liquidity. High liquidity comes with pairs like GBP, USD, or even assets like gold have high liquidity. So you have high volume because there are more orders being placed, there are more participants trading that particular asset. So you have high liquidity. And these liquidity areas are usually identified on the chart. So you want to avoid areas where there is liquidity sweeps. Okay, this term is very common. Liquidity sweeps or liquidity grabs is very common in the forex market. So this is what you want to avoid, and I will give you a solution at the end of this video. I will be showing you how to avoid liquidity grabs and those traps which take out your stop losses. So here we are looking at where liquidity sweeps or liquidity grabs happen, where your stops are normally taken out by the liquidity grab, okay? You are caught up in that liquidity grab every time you take a trade, and yet you have a very good strategy. Okay, you can have a very good strategy, but when this liquidity grabs, sometimes the manipulation by the big players in the market, they take out your liquidity, your stop losses at liquidity area. So we are going to identify those liquidity zones and avoid losing money. So those liquidity zones are usually at resistance areas. Okay, they happen at resistance areas because at resistance areas on the chart is where most traders or many traders are anticipating to sell. Okay, so in that case, there is something we call buy side liquidity, okay, which is taking out people's losses who are selling at resistance. There is usually a spike at the top of the resistance, taking out stop losses before the price heads actually lower. All right, so that is called buy side liquidity. It happens at resistance normally, okay? And there is something called sell side liquidity. This is the liquidity which is taken out at support, below the support level, because most traders like to buy at support. They're anticipating to buy at support. So when they take their trades at support, they take their buys at support, there's usually sometimes a spike down, okay, which breaks through all their stop losses, taking them out of the market before actually going in their previous direction, which they anticipated to the upside. So we want to avoid sell side liquidity being taken out or our stops being taken out at support. The solution is coming at the end of the video, and we are going to be looking at briefly fake outs at both support and resistance of trend lines. So liquidity sweeps or grabs, okay, or manipulation usually happens at resistance, support, and also at trend lines, because at trend lines we like to buy or sell. Okay, if it is an uptrend, we like to wait for a bounce at the support levels of our trend lines before we buy. And on the reverse, we like to buy to sell at the resistance levels of our trend lines. So let's look at the charts here. Okay, there's an example here. There's an example. As you can see here, the market is the market structure is very much bullish. Is very much bullish. We can even draw a trend line over here. We can draw a trend line here. I just want to illustrate to you how manipulation happens at trend lines. So we are going to begin with the trend lines. Okay, so this is a trend line. It shows an uptrend. This is actually an uptrend. It's a bullish, a very bullish market. All right, this is a very bullish market. It's heading upwards, right? So we are looking at this bullish market. But as you can see here, there is the first touch here. Okay, it's a very strong trend line. Second touch over there. Okay, we have another touch over there, several touches here actually. Okay, and we have another touch over there. All right, okay, we have about 4 significant touches. So this is a very strong trend line. So most traders, most retail traders are actually looking to waiting for this price to return to this trend line before they can place their buys to the upside. But guess what happened here? This is what happened. The price dropped, got to this trend line and broke below. It broke below. Okay, so the moment this price broke below, all right, the moment this price broke below, guess what most retail traders are thinking? They are thinking now, okay, the market structure is going to, there is a change of character to the downside because this, they see that this previous low has been taken out here. Okay, has been taken out here. So they see a break below. So what they are thinking, what most retail traders are thinking is selling now. After this break below, they are waiting for a retest before they can actually sell all the way to the downside. But they are not, because they are not patient enough. All right, they are not patient enough and not very observant. Guess what happens? The price they are taken out when they placed. You see, they placed their sells after this bearish candle and place their their stop loss up there, okay, and target profits all with the take profit all the way down here. But guess what the market does? Okay, the price gets to this point and goes back all the way and takes out their stop losses up here. Okay, takes out their stop losses. So this is manipulation to take out stop losses before actually the price heads up in the previous direction, which they had anticipated over here. Okay, they thought it would bounce off here and go up. All right, which was right, but they had to be patient. After this break below, it was a manipulation to take out liquidity. All right, so guess what happens here? This is a liquidity grab. Okay, this spike here is to take out the stop losses, which are below here. Below here, there is a lot of liquidity because most people have placed buy orders along this trend line. So there is a lot of liquidity here. Stop losses below here. Okay, there are stop losses below here. So this spike here is to take out the stop losses of people who have bought it at this place. So imagine this takes out the seller. Okay, for those who sold, it takes out the seller when it returns and also takes out the one who bought around here, who thought that this is a buy order around here. So there are those who expected the market, okay, there are those who expected the price to immediately bounce off here. So those ones also lost here because this is a liquidity sweep here. This is a liquidity sweep. it took out the stop losses of both buyers and sellers. So a smart seller would wait, okay? You would wait for price to actually close below, not with this spike, okay? Don't consider the spike, consider the candle body. Wait for a break below here, okay? Taking out this previous price at the trend line. Wait for a take out of that price with a large candle, okay, bearish engulfing candle, and wait for a retest around these areas and wait for a confirmation to sell. All right, so you would place your sell orders, okay, after a confirmation here, okay. That's how you would win if this market were to head downwards, okay? You would place your trade here, okay? You'd place your trade here. You sell from here, but it did not get here anyways, all right? So this is how you would sell if this market was really going down, but it wasn't going down. This was just a manipulation to take out liquidity, to grab liquidity here, to gather liquidity, because there are stop losses placed here by those who were buying at this point. There are those who bought at this point and put their stop losses below here, so they were all taken out. So when momentum was gathered because of the liquidity that was grabbed here, check how the market heads upwards, okay? So the smart buyer would have waited for price to return, okay? You'd wait for price to return above the trend line, okay? You'd wait for price to return above the trend line, okay? And wait for a retest before you can buy, okay? So this is what you would be waiting for, all right? You'd wait for something like that. So you'd actually buy after the break above here. You see this area here? You'd wait for a price to break above there, okay, before you can actually place your buy order with that bullish engulfing candle. You'd place your order and place your stop loss just below the trend line there, and target your 1 to 2, 1 to 3, 1 to 4, whatever. This is a 1 to 3, and you'd still win this trade. If you are patient enough to wait, okay, you'd still win this trade. Check this out, guys, okay? You'd still win this trade, okay? So if you targeted a 1 to 3 reasonable, this is a 1 to 3, okay, you'd still win that trade. So that is how you would take this trade. All right, so you have to be patient. You have to be patient. Don't jump in immediately, so you'll be taken out. So this is an example of how liquidity was taken out here. Okay, this is a liquidity sweep, clear liquidity sweep. So be careful, guys. Be careful. This is a support level. Okay, this would be our support. Okay, as you can see, and then there is a resistance over here. There's a resistance over here, as you can see. So there was a first touch here. There was a touch here, okay. There's a touch here, another touch there, another touch there, another touch there, another touch there. Several touches actually at support. Okay, this was a strong support. Just want to change the color of the resistance. Okay. For a difference. So that is our resistance. Also, you can see there are several touches here, okay, before this fake out. This is a fake out here, guys. This is a fake out, okay. This is a fake out, okay. And then there was, after the fake out, there was this touch here, okay. There was that touch. There was that touch, okay. And then there was this touch, there was that touch, there was this touch. So price could not break above. So most retail traders are waiting, okay? They're actually waiting for price to break out of this consolidation. They are waiting for price to break out of this consolidation. They are waiting for a breakout before they can buy or sell. Okay? So as they are waiting for a breakout, okay, as they are waiting for a breakout, something happens here. First of all, something happens here. You see this bullish candle. This is a manipulation, a fake out, okay, to induce people to buy. So some people jumped in here for buys, okay? Some people jumped in here for buys. If you jumped in here for a buy after this bullish candle and placed your take profit bill, your stop loss below here, okay, and targeted the 1 to 2 or 1 to 3 or whatever, guess what? This took out your stop loss, okay? This took out your stop loss. It came out and took you out here, okay? So this was a fake out. So pay attention. You have to be very careful. So this was a fake out here, okay? This was a fake out. So what is this? What would be the solution here? The solution would be to wait for a proper retest. This, you don't jump in after the bullish. Wait for a proper retest of these areas of this resistance, and wait for some candlestick pattern on the lower time frame, like bullish engulfing candle or 3 white soldiers or double bottom around or on above resistance before you can actually place your buy order. Don't jump in to buy immediately when you see this breakout, all right? Because it could be a fake out, right? Just like you see here, this was a fake out, okay? I will show you what I'm saying. So this would have been the solution, okay? Wait for a retest, a proper retest, and wait for your candlestick pattern confirming an upward movement, guys, all right? To avoid this kind of manipulation taking you out with a fake out, right? So this trader would have lost money because he jumped in with the bullish engulfing candle, put his stop loss below here, and his stop loss was taken out, guys, okay? So this is the solution. Wait for a proper retest and watch your candlestick patterns to confirm an entry. So as here also, traders who are waiting for a breakout here, they waited for a breakout. Once this breakout took place, some people started selling, okay? Many traders started selling here, okay? This is another liquidity grab, okay? This is another liquidity grab down here. You see this takeout here is with a long wick. This is a liquidity grab here. So you can see that when price broke out, some people were busy selling with this candle, this bearish candle. They are busy selling, all right? They are already busy selling below here. So as they place their sell orders, okay, guess what happens, okay? After this breakout, some of them were actually very happy because price even dropped up to this point. So they thought that they were actually making profit. They were in profit, but guess what? Okay, this bullish candle, okay, before the price starts rallying all the way to the upside and takes out the stop losses here. Takes out the stop losses here, grabs stop losses of those who are selling, and even we'll see how it takes out those who are buying. So it takes out those who are selling here because they thought this is a breakout to the downside. So what would have been the solution for those who are selling? Also, they were impatient. They were really impatient. For if you are selling, if your aim is to sell here, you would have waited for price to return, to retest here properly, a proper retest, and watch out for your double top or 3 black crows or bearish engulfing candle before you can actually place your sell. All right? All right, that would be the solution. But that did not happen. There was no proper retest. So that's why these traders, okay, their stops were taken out here. As you can see, for those who placed their sell orders here, were really taken out. All right, so this was a liquidity sweep. You see this long wick here took out liquidity, so it returned into the range. The price returned into the range and broke out. And there are those also who bought around here. The moment it broke out, they say most traders were thinking, okay, now it has broken out. Now I am going to be buying. So there are those who also made a mistake here. There are those also who made a mistake to buy when they see this bullish engulfing candle. You see this bullish engulfing candle here, this one here. So there are those who are buying at that bullish candle. So guess what? When you buy at this bullish, if you were to buy at that bullish candle like this, let's say you bought here and you placed your stop loss just below the resistance level and targeted a 1 to 2 reward ratio, something like that. Guess what? This would be a liquidity grab below the resistance. You see what I'm saying? So this would be a liquidity grab. This is a trap to take out liquidity to gather momentum to the upside. So you have to wait for a proper retest first, like what happened here. You had to wait for price to return to test these previous areas, grab liquidity before you can wait for your candlestick patterns to the upside. Guys, that would have been the solution. So you can see that those who went in early, their stop losses were taken out here. All right. So if you were to wait, this would have been the solution. Okay. You would have waited for price to break out and wait for this liquidity sweep to happen. There is that retest, and then you would have bought at this bullish candle here, as you can see here. This is a bullish candle. This would have been your confirmation. Okay, this would have been your confirmation to buy. All right, this would have been your confirmation to buy to the upside. So you'd have placed your buy order after that bullish candle, placed your stop loss just below this spike here, and targeted a 1 to 2, 1 to 3, 1 to 4, 1 to 2 is ideal. Okay, guess what? Even this trade would have taken even a 1 to 3 risk to reward ratio if you are patient to hold. This is how you'd win this trade easy. Okay, so always wait for a retest. That's the solution. Wait for a proper retest and watch your candlestick patterns confirming the entry to the upside. Don't be quick to buy when there is a breakout with a bullish momentum or a bearish momentum, like in this case. Okay, so this was a fake out. This was a liquidity grab here, because there is a lot of liquidity down here, guys. Below here, there is a lot of liquidity. Okay, a lot of sell side liquidity here, sell side liquidity here. Okay, that is sell side liquidity down here. Okay, and a lot of buy side liquidity here, because this is a resistance. Okay, a resistance area, because it had been resisted before. The price could not break above, and here the price could not break below.